Welcome to Illuminati Silver. We tell the truth about silver. Today is Saturday, the 6th of June 2020, and we're publishing our gold and silver weekly update for the week ending the 5th of June. Gold fell $46 last week, from $1,731 to $1,685, having hit a high of $1,745 and a low of $1,671, a fall of 2.6%. In sterling terms, gold finished the week at £1,330. That's down £71, so a much bigger fall in sterling terms. And in euros, it closed at €1,493. That's down €66. Silver fell 45 cents, from $17.90 to $17.45, having hit a high of $18.41 and a low of $17.24, a fall of 2.5%. In sterling terms, it closed at £13.78. That's down 72 pence. And in euros, it closed at €15.45. That's down 0.66 euros. The gold to silver ratio fell marginally this week, from 96.7 to 1 to 96.5 to 1. The Dow Jones closed on Friday at 27,110, up 829 points on the day and up 1,727 points on the week. The S&P 500 closed at 3,193, up 81 points on the day and up 149 points on the week. And the Nasdaq closed at 9,814, up 198 points on the day and up 325 points on the week. So equity markets had a very good week. Brent crude closed at $42.30, up $4.46 on the week. And WTI crude closed at $39.55. That's up $4.06 on the week. Considerable difference to what these prices were just a few weeks ago. Now the dollar index stands at 96.93. That's down 1.41 points on the week after a 1.52 point fall last week. And we have now breached the sort of 97 limit that we capped really on the dollar. So it'll be interesting to see if these figures will nudge back up a little, as our analysis has said that we should have a dollar index at or around the 97 mark. Now, we concluded last week's update with the following words. Silver, we do expect to breach $18, but may well find $18.50 resistive. But we're certainly not expecting it to surpass $19 next week. And gold, we also expect to have a little jump, perhaps attempting to surpass $17.50 and try and reach that elusive 1800 level. However, a word of caution. If the data coming out is better than anticipated on most fronts, then of course this will boost equities and curtail precious metals. Well, gold did get as high as $17.45, but didn't quite make the $17.50 mark. But the economic data, or at least some of it, especially towards the end of the week, was better than anticipated. And so equities rose and gold prices fell. This was a shame, as it did open stronger on Monday, but fell back on Tuesday and continued to do so. Silver did find $18.50 resistive and could only manage $18.41 and closed just marginally below our $17.50 to $18.50 range we predicted, resting at $17.45. So looking at gold first, really most of the action occurred on Friday, with the US non-farm payrolls actually reporting job gains of 2.5 million, compared with job losses of 20.7 million the month before, and expectations of an additional 7 million deficit. The jobless rate declined to 13.3%, compared with expectations of a rise to 19.5%. Now, we would not be surprised to see this non-farm payrolls figure revised slightly next month, but nevertheless the trend was clear and certainly caught the market unawares, including us, to be fair. We were not expecting atrocious figures, but the ADP report on Wednesday and the weekly jobless figures on Thursday did suggest a worse figure than what we actually had for the non-farm payrolls. Now, this placed a significant tailwind behind equities, which were languishing after recent improvements. Now, for the month, the Dow is up over 11%, and the S&P 500 is up over 9%. The Euro Stoxx 50 is up over 16%, and the DAX index is up nearly 18%, with the FTSE languishing but still up at 9% over the past month. Now, the payroll figures actually caused US yields to rise significantly, with the 10-year yield rising within a whisker of 9 basis points, providing a 25 basis point gain for the week. And the US dollar rebounded somewhat from some quite significant lows. So even though it had fallen, it had been much lower. Now, we mentioned last week, and in fact doing some of the videos we produced during the week, that the 50-day moving average for gold at $1,697 represented a degree of support. Technical analysts now see this as resistance, and the 100-day moving average of 1642 being the next support level. Short-term and medium-term momentum remains negative, and so from a technical analysis point of view, even lower prices are to be expected. Silver prices opened on Monday considerably higher, and then began to fall back later on Tuesday, and more or less continued its descent throughout the week. We're still of the view, though, that our much heralded $17 lower support level should hold, as we have to begin to accept that as the economy improves, then the industrial demand for silver should once again begin to increase and offset any falls in the monetary demand for silver. But that said, below $17, the next strong resistive level, or resistance level, is very close to 1650. So if there is a pullback, it could quite quickly fall to that level. We're not fully convinced this will happen, and that $17 should really hold. Now, we produced a number of videos this past week following the economic data, but as we stated last weekend, the biggest effect was likely to be Friday, and this was the case. So let's take a look then at what's being reported this coming week. Well, on Monday, there is nothing scheduled. On Tuesday, we have the wholesale inventories for April. Wednesday, we have the Consumer Price Index and Core CPI, both for May. We also have the FOMC announcement. This is the interest decision-making body of the Federal Reserve. And after that announcement, Jerome Powell's, the bank chair's, press conference. On Thursday, we have initial weekly jobless claims and the Producer Price Index for May. And on Friday, we have the Import Price Index for May and the Consumer Sentiment Index for June. That'll be an interesting one to look at. So all eyes, though, realistically will be on Wednesday to see what the Fed will do. Or perhaps, if they do very little, perhaps more importantly, what they say regarding interest rates and potentially additional QE or financial liquidity measures. Now, we shall comment before then on what is likely to happen. So in conclusion, it's a shorter video this week. In conclusion, we expect silver still to oscillate in the 1650 to 1850 outlier range, with the most likely range to be between $17 and $18. Gold, we expect on the outside for it to oscillate between $1,600 and $1,750, with $1,650 to $1,750 being the most likely measure. Now, this may, of course, change depending on geopolitical issues and or what the FOMC announces on Wednesday. Otherwise, consolidation is the most likely recourse. So if you're a technical analyst, you will expect the gold price to fall towards that sort of 1640 and then 1620 and then 1600 level. But that's the technicals only. Now, tomorrow we have an interesting podcast, so please do not miss it. It's a little different in terms of subject matter from the norm. Now, what do you think is going to happen to gold and silver prices next week, and what perhaps geopolitical issues do you believe may affect it? With particular attention on the economic issue of the FOMC and what you may think they are likely to do regarding interest rates. Now, we are producing videos on a daily basis because there are so many things that can affect the markets. And we could see, certainly last week, almost at the drop of most economic data being announced, the markets reacting. In this case, it was the equity markets that shone through. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting we update our Richard and Greg channel every few days. Meanwhile, we trust and hope you have an enjoyable and safe weekend and a prosperous weekend. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.